Or to discuss more about attracting foreign investors, we have Volker Bromund. He is the Executive Director of Prime Consultancy. All right, so good morning.
Morning, Adrian.
Yeah, how are you?
Fine, thanks.
All right, then, well, looking at Indonesia's current situation now, especially in terms of the economy, well, Indonesia is having a hard time because of the economic deceleration, even though the data has not been released yet. Well, how do you see the current investment climate in Indonesia looking at such a circumstance?
Yeah, investments are always long-term, and investors plan at least 1 to 2 years ahead before they do an investment. So to look at a quarterly basis is not the right perspective when looking into investments. So the investment climate, I think, after the election year in 2014, should be favorable because, let's say, the political uncertainty is there. The commitment from the new government, for example, on energy, renewable energy and manufacturing is there. So investment should come in.
Okay, and then looking at such circumstance now, which aspects more influencing the investment climate? Is it about the certainty, or maybe about the political situation, or maybe about the regulations?
Very important for investors is the legal certainty, so that they are certain that their investment which they take now or in the next 1 or 2 years, that they are sustainable over the next 20, 30 or 50 years. Because an investment is not a short-term thing, but it's a long-term. And for a long-term investment, you need a supportive business climate, of course infrastructure, a legal environment, and of course you have to have the perspective that your business is flourishing, because otherwise an investment doesn't make sense.
All right, then, well, it's again about the economic deceleration in the first quarter of 2015. Indonesia Employers Association just stated all industries in Indonesia are not thriving right now. So well, not only Indonesia, globally, all countries are having economic deceleration, including China. And then how do you see this, the correlation between China economic deceleration to Indonesian economy?
Of course, some of the Indonesian businesses, like the commodity sector, they are exporting to China. And when China is not buying, then this sector suffers. Also the global, let's say, slowdown also in Europe, which is not as good as predicted, has an impact. But Indonesia has roughly 60 to 70% of the economy is local consumption. So that means theoretically Indonesia could compensate for a sluggish world economy by increasing the domestic consumption and domestic production. Unfortunately, what I read in the newspaper, the government, for example, they have spent only 2.5 to 3% of their budget for projects. In Germany, in the first quarter, they spent already 20, 30, 40% of their annual
budget. Even in the
budget
first quarter?
In the first quarter,
Right.
because the government typically puts a brake on spending already in August or September because they spend so much. In Indonesia, it's the other way around. They start very slow and typically towards the end of the year, they give back some of the budget allocation, which will never happen in Germany. So what I say is Indonesia could decouple from the global economy, also from China, and ease that burden with increasing local spending. But for local spending, the government has to do its portion and to spend the budget.
Okay, but then even though Indonesia is having the impact from the economic deceleration from the global market, which sectors in Indonesia will be, again, will be categorized as safe, or maybe not get the impact that much?
For sure, the automotive industry and the motorbike industry, that they have suffered a little bit with sluggish sales, but they are more or less stable on a quite high level. The food industry, due to the local consumption, is also very stable, and to a certain part, the textile industry. But a lot of textile is, of course, exported into the world, and I have also noticed from the textile companies that this is suffering a lot at the moment. The textile companies are not doing well.
So from your point of view, those sectors are looking appetizing for investors to invest in Indonesia, isn't it?
Yes, specifically the automotive industry. They look for manufacturers like Volkswagen to come. They have announced it over the past few years many times. It didn't materialize, but I hear also due to the depreciation of the rupiah, which makes them a recalculation of their assumptions. But for example, in the food industry, there will investment come also in the mining industry and in the processing of the ore. So I see a lot of sectors where there is an investment opportunity for foreigners, also in the power generation sector.
But then, after all, I guess, well, do you reckon Indonesia is still doing well compared to other countries in terms of the economy? Because, as I said before, in the global economy is suffering from the deceleration of the economy. But then, how do you see Indonesia compared to other countries?
I mean, you just heard it, the growth is 4.8%. Yeah. In Europe, it's around 0.5, 0.7. Yeah. In the US, you have a growth rate of 2 to 3%. So Indonesia with roughly 5% is not too bad off. Yeah. Of course, they could do better. A target is 6 to 7%. Yeah. And as mentioned, if the local spending, also from the government on infrastructure, on projects is done and the budget is spent, then you will see also, of course, a higher growth rate, which is necessary to keep the Indonesian economy going and to absorb all the young people which are coming to the market. Yeah. So overall, yes, it could be better, but 5% is internationally quite a good rate.
Okay. Well, recently the government just stated that they are going to launch a tax allowance facility to give ease to investors in order to invest in Indonesia, to put their investments. All right, so, but we'll discuss it in the later segment. We'll be right back with more discussion. Stay tuned on Revenews International.